Shares of CrowdStrike are under pressure in the pre-market after Morgan Stanley downgraded the stock to equal weight from overweight. It's cutting its price target by $5 to $490. The analyst said that 50% rally in the stock from April means CrowdStrike is at full valuation, and the company is still a compelling long-term story, seeing second-half growth to accelerate. Keep in mind, CrowdStrike hit an all-time high on July 3rd. Time now for Options Corner. Joining us to take a deeper look at this cybersecurity stock, it's Rick Ducat, the Duke of Data himself. All right, CrowdStrike has been an outperformer year to date, and it feels like quite a different story than where we were a year ago. What are you noticing about the trends here, Rick?
Yeah, for sure. It's like that situation feels so long ago in the past now here, as we see that CrowdStrike is up almost 27% during the past year, outperforming its sector and the broader market here. But it's been a rough couple of sessions here for CrowdStrike. You could see we approached these highs here, 517.98, the intraday all-time high there. But we hit a ceiling, and we also formed several candle patterns that were not very encouraging to the bullish crowd. We had a bearish engulfing candle, a Harami candle, a doji candle. All these things spell a slowdown in momentum. We can see that was happening as well in the RSI. Bearish divergence, RSI trending downward as price was trying to keep accelerating here. Now we are below our 21-day exponential moving average and our trend line here. Our old highs near 455. That seemed like a potential supportive point. Volume here and here between about centered around 430 and 480 or so.
Okay, and then Rick, what are you noticing about any recent trends in volume?
Sure. So we can look at the options market for last session here. About 66,000 contracts traded hands, 63% calls, actually slightly below average in terms of activity. Now, if we consider the July 18th expiration, total OI for the month, open interest 65,000, 47% calls. The July period is our highest time of open interest here. This shaded area, the expected move, roughly 449 to 491, 4.5% to the upside or the downside. 500, the most active call, but the range in general, 460 to 620. If we look at the put side, puts mostly came in 400 to 480, but the highest activity here near 380.
All right. Thank you, Rick. That's our lead market technician, Rick Ducat. Now to take us through an example trade, we've got Tom White, senior options contributor and co-host of Fast Market. All right, Tom, you've got Morgan Stanley becoming a little less constructive on CrowdStrike now. It's been an outperformer year to date, and like Rick and I were just talking about, it's a very different story now compared to where we were a year ago. What's the approach for an example trade that you would take?
Yeah, Diane, it's actually nice to see an analyst come out and, say that the stock's fairly valued at these levels and not upping their price target, which they did, just up to 495 from 490. But like you mentioned, they did cut those estimates on the downgrade. So looking at this one, it maybe gives you that opportunity to maybe take that bullish trade, because remember, this stock was up nearly 40% this year. Going into this downgrade today. So it's still outperformed that all-time high of 517. It's pulled back pretty significantly from those levels. So a lot of traders out there might think, hey, I missed this rally that we've seen in this stock. Well, this strategy takes advantage of the pullback that we're seeing of nearly $10 this morning. Looks like the stock's going to open up about 467 or so. So I looked at a strategy that, gives yourself a little bit of cushion to the downside, taking advantage of maybe the pullback and maybe the higher implied volatility levels that we're going to see this morning when the stock does open up. So going out to the August 1st weekly option, so just about 18 days to expiration, about 2.5 weeks. I'm going to sell the 450 strike put, and then to make it risk defined, this is a high price stock, we're going to buy the 430 strike put, so a short $20 wide neutral to bullish put vertical. You're going to collect roughly about a $5 credit if we open up here about 467. So that's what you can make on this trade, $500 per spread, but it takes your break even down to 445 to the downside. Now that's going to be about 4% below where the stock's going to open up, about 467. So you've got that nice cushion to the downside, and that level of 445, you've got a probability of that being out of the money, which is what you want. You want the stock to remain above that 445 level of about 70% probability of finishing out of the money. So you've got those probabilities in your favor. You look at this type of strategy, it's more like a baseball analogy where you're trying to hit singles and doubles, maybe take a walk and not swing for the fences. Staying risk defined in here. You've got $1,500 in risk, but that's all the way below $430 per share. So the pullback might be helping out, traders for them to find positions to get long this stock. Maybe buy calls, maybe buy call verticals, but this example gives you that probability, a high probability of success where, hey, I can profit if it goes higher, or if it stays here, or if it goes lower. I can be wrong on this one and still be profitable as long as it remains above 445 over the next 2.5 weeks.
Okay, so this seems like a very flexible example trade here, and you said that break even 445. The approach is a put vertical example trade there for CrowdStrike. Thank you, Tom. That's our Tom White, co-host of Fast Market, with an example trade for CrowdStrike. The stock, as he mentioned, up nearly 40% year to date.